The white zone is for immediate loading and unloading of passengers only.
Well, happy first Monday of 2023, everyone. Bryan Devore with Devore Realty Group with the first Monday market moment of 2023. And we are going to have predictions for 2023. But let's first recap the last week of activity. Hopefully we had a good holiday season. Let's see if the market had a good holiday season. Right now, we have 2,867 homes for sale throughout San Diego County, a huge drop of 310 from the week before, which was also a big drop. Median list price of those homes, $889,000. The average days on market is 70. Pending sales, 1,688. That's down 114 from last week. So continuing to see a drop in both inventory and demand, but a bigger drop in inventory. The median list price, $765,170. The average days on market for the pending sales, 38. The months of inventory dropping down below 2 months, down to 1.92 months of inventory, down 0.24 from the week before. So less than 2 months of total inventory throughout San Diego County, moving even more into a seller's market, interestingly. Here's the totals in chart form, showing the blue lines continuing to go down. The orange line also continuing to go down over the last couple months. All right, what did we see in the last week? We saw 58 more homes come on the market last week than the week before, 255. Of those homes, the median list price was $849,000, $888. New pendings, 183, also a drop. A drop. Inventory or new actives went up 58. But pendings went down 55. 183 fewer homes went into escrow last week than the week before. Christmas, of course, had something to do with that. Median list price, $749,000, $450. Average days on market, 36. New pendings listed within the last week, only 6. So only 6 homes that went into escrow were on the market for a week or less. And 16%, 29 homes that went into escrow in the last week were on the market for 2 weeks or less. How many sales did we have? Just a small drop in sales from the week before, 240 closed sales. The median list price, $745,400. Median sales price, $737,000. So just a little hair under the list price. Average days on market, this is a big jump, 41 days. So 9 more days than the week before did it take to sell the homes that closed escrow. So now we're starting to approach maybe 2 months of market time. Least expensive sale last week was $35,000 in Borrego Springs, while the most expensive sale was in Rancho Santa Fe for $11,500,000. All right, here's a chart showing new actives, new pendings, and new closed sales. And we can see the inventory did bump up a little bit. Kind of interesting for this time of year to see homes coming on the market more than the week before. But we did see the pendings drop and the closed sales drop. And the median list price and the median sales price hovering around the same. Okay, this is the Stephen Thomas report, shows the total inventory over the last few years. And you can see the orange line is this year. So kind of a recap of the year. We saw inventory go up a little bit in the beginning of the year, dip, and then slowly go up and then massively go up. As interest rates went up, demand went way down. And so the total number of homes that were on the market were staying on the market was going up while new listings were going on the market as well. It started to dip, went up a little bit, and it's really over the last 3 months or so has really starting to fall. And we are below where we were 2019. We are still above where we were in 2020 or 2021. The demand or last 30 days pending sales activity, we did start to see kind of flatten out this year versus the last few years. So over the last few years, demand really fell off the cliff this time of year. Not so much this year, which is kind of interesting with rates going up and demand not going down as much as in years past. We'll have to see if that continues. Speaking of, will that continue? Here are the predictions for 2023. I took this from Stephen Thomas, who has been very accurate on his predictions over the last 20 or 30 years that he's been doing this. So inventory beginning the year is at its 3rd lowest level since 2012. We are still under market as far as how many homes we have available for people who want to buy, as we can see by the average, the 1.92 months of inventory. Expected to rise, inventory is expected to rise. Why? Well, because muted demand's going to stay kind of low. But inventory will still stay low because of hunkering down. What does that mean? A lot of people are staying put in their homes and not looking to sell. Why? Because they have an incredibly low interest rate and they don't want to trade that in for a higher rate. 89% of current homeowners in San Diego County have an interest rate of 5% or lower. 71% have 4% or lower, and 29% of people who own a home in San Diego with a mortgage have a rate of 3% or lower. So they're not looking to move and get a higher interest rate of about 6.5% where we are right now. They're going to get much less house for the money than where they are right now. Inventory will rise along with demand when rates hit around 5.5%. That's expected to be somewhere around the middle of the year. If we are in a recession, if the Fed has to lower interest rates, if inflation stays in check, likely to see interest rates around 5.5%, somewhere around the middle of the year. Buyers are still right now looking for value with pressure of affordability. It's hard for people to afford homes if prices haven't dropped a ton, but rates have gone up. And so buyers are looking for value and they want to see it in quality homes, good locations, etc. Closed sales are expected to fall between 3 and 4.5% from last year, which is already a pretty strong year. So we're not going to see like we saw in 2008, where sales just fell off the cliff. Only 3 to 4.5% decrease in the total number of sales in San Diego County. Distressed sales will remain low. A lot of people have a lot of equity in their homes. They're not losing their jobs. So we expect distressed sales to remain low. And finally, what are prices going to do? They're expected to fall somewhere between 6.5 and 8.5% for the year. Given the fact that they've gone up so much over the last few years, a slight pullback of 6.5 to 8.5%, if you've owned your home for at least 2 years, maybe a year and a half or more, you probably are in still good shape versus where you were when you bought the home. That's it for this week's Monday Market Moment and the predictions for 2023. Again, scan the QR code to track your home's value, and look forward to seeing you in the next Monday Market Moment. We'll see how New Year's affected inventory and demand and closed sales on the next Monday Market Moment. Have a great day. Look forward to seeing you then.
You've been watching Monday Market Moment with Bryan Devore. Please subscribe to our channel so you never miss an update.